Hello and welcome to Building the Premier Accounting Firm. This is a podcast dedicated to helping individuals have the premier accounting firm in their area, offering quality accounting, bookkeeping, and tax services. It's the purpose of this podcast to actually give you the information from the experts that you can use to actually work on your business, addressing such things as marketing, sales, pricing, going into areas of such as technology, onboarding, client retention, and so much more. So I invite you to actually subscribe to and listen to the episodes as we dive deep into these conversations with the episodes each and every week. I'm your host, Roger Knecht, and for more than 20 years, I've been working with accounting professionals to help them start and build successful accounting businesses around the world. And it's in this process that I've met some amazing individuals and share their stories, and am excited for each week when I bring on the guests that I have as they bring their expertise to this conversation. Today, I have an amazing person that I'm excited for you to meet. It's Moshe Teitelbaum. And Moshe happens to be a serial entrepreneur. In fact, the Voice of Israel has actually declared or called him the Jewish Steve Jobs. He's obsessed with redesigning antiquated, broken systems. And after selling his previous company that changed the world of telecom, he decided to take the archaic world of bookkeeping and accounting as well as money management on. Now, Shatar is the company name, and it interconnects accounting applications with banking formats or platforms. And he's basically upended the archaic and cumbersome world of business payments and invoices by eliminating the manual processes involved. Now, what Shatar's actually doing is a comprehensive network that will be using predictive software with the intent of making the human-driven accounting process that we're familiar with a relic of the past. So with that, let's welcome Moshe to the show. So welcome, and thanks for being here.
Hi, how are you?
Very, very good. So what I wanted to do is I wanted to go back. You obviously had this company before that you sold. That obviously is a transaction in and of itself that led you to then this new business that you're doing. So tell us real quickly what it was like to actually sell a business.
Well, selling a business is an interesting feeling, especially a business that you start from the ground up, that you put in a lot of effort in it. Every sale has its own process and flow, how it came about and how it gets to the final sale. So it's very hard to say. But for me, it was an interesting experience based on certain things in the previous business that we decided that we're in the best position to sell the company and move on to a next project.
Yeah.
Actually, in that company, I got introduced to a certain pain point that introduced me to understanding a certain deep understanding in the world of accounting and bookkeeping, which led us to whatever we have developed here in Star.
Yeah. Well, one of the things that I appreciated from that little statement is that when selling a business, it can be difficult. Many entrepreneurs, when they build it from the ground up, like you did with your company, get very emotionally attached to the business. So selling the business isn't just a transaction. It can be a very self-defining moment. And so you went through that. And like you said, you got kind of exposed to a new need, a new pain point that existed that you felt you could address. So
first of all, to be honest, it wasn't my first sale of a company.
Oh.
It was actually my third one.
Third one, even better.
So
that I did not know. So congratulations on selling 3 businesses. Yeah. That's great.
So it wasn't my first one, but it was the largest one by far, the most successful one by far. And I would say it changed me a lot in a lot of ways, including the fact that it's the first business that I had a non-compete clause, so I couldn't do anything in telecom for a couple of years. Uh-huh. So I had to find a different area to work on.
So I'd like to actually dive into that a little bit. So a lot of accounting professionals, as we're working with business owners, may find themselves in a position where they are entertaining the opportunity to sell a business, or they're evaluating whether or not now's the time to move on. And for many entrepreneurs, to start the business, get it to a certain point, it's very natural for them to go to the next project. So you've sold 3 businesses. What have you learned in that process about yourself and what it's like to sell the business?
It's interesting because every sale brings you more knowledge that you didn't know before. One small example, I've never used a tax lawyer as an advisor before selling a company. But after selling my latest company, I made a huge mistake by not advising a tax lawyer prior to selling the company. If I would have done a couple of things different in the sales process, like minor things in the agreement, which probably wouldn't affect anything to sale, we probably could have saved a lot of money in taxes. So, one thing I would advise anybody who is doing a sale, regardless if it makes sense to you or you can see anything, talk to a tax lawyer, talk to a tax consultant.
I like that because what I'm hearing you say is that the sum was large enough that it pushed you into higher tax brackets. And I'm presuming that it would have been better that you got paid out over time versus that initial lump sum.
It's not only paid out of over time.
Hmm.
Sometimes it's better to sell shares of a company. Sometimes it's better to sell a software of a company.
Uh-huh.
Sometimes it's better to sell assets of a company.
Uh-huh.
It depends. You can structure a sale in many different ways that will affect the amount of tax you have to pay. At first glance, it always seems like sell the assets, don't sell the shares. And if you don't sell the shares, you don't have capital gain. But in some cases, there are many small business tax incentives for capital gain tax where you should rather sell your shares in the company and get capital gains and use other type of tax definitions and write-offs in order to not have to pay it.
You know, when you're talking about these experts like the tax expert, what are the individuals whose expertise is you're needing when you're selling the business? Who are the people that you think should be on the team?
Mainly latest new tax laws, tax rules. For example, Obama created a rule which I think was even increased in Trump's times. I'm not really sure about that part. That allowed a company that was never valued at $50 million valuation, and it was held in single ownership for 5 years, not to pay capital gain taxes.
Uh-huh.
And sometimes your sales lawyer will try to help you with eliminating taxes and trying to structure the deal as not selling shares but selling assets. And for the buyer, it doesn't matter, but it's just the way how you sell it, who
Correct.
remains the owner of the corporation and other stuff. But it's not really relevant. And also, who gets the money? Is it a corporation? Is it a person? There are certain details. If you talk to a tax lawyer and is updated and versed with the latest tax rules and tax incentives that were given to your specific industry, your specific type of business, size of business, that's what I'm talking about.
Yes. Well, I'm glad you brought this up and kind of explained the tax ramifications of this because what you were defining may be familiar with a lot of the listeners, but at the same time, you're sharing the personal ramifications of this. So when selling a business, oftentimes what I've been told is you need a merger and acquisition specialist that can come in and address some of those situations, help draft the offer, and be the middleman that can actually represent kind of like a real estate transaction. You got the buyer and the seller. Then the other is you've got your legal attorney, perhaps a tax attorney, as you were suggesting. So these are key individuals that should be involved in the process that can actually advise before the sale is made whether or not it's the right way to package the business as you were describing. So well said. I like that. Now, the thing is you sell the business, you have this third business that goes over very well. You obviously are perhaps in a position of I can take a break now. How long between selling the business and starting this latest venture with Shatar?
That's the thing. I have the entrepreneurial bug. I I took a 30-day vacation, and by the 15th day, I was already in the middle of filing for a new corporation.
That is so funny. And is this something that you are doing on your own? Do you have partners?
I now have partners, but at the time I started it on my own. I actually started it as a research project.
Okay.
So the way it came about is in my previous company, we used to do around 500 payments a month, 500 vendor payments a month, the vendor commission. All in all, we were paying 500 payments, and it was very cumbersome. We started with paper checks because paper checks has a great advantage. It has a pay stub
Uh-huh.
where you can see the pay data, the history. Why did you pay me this month this much and that month that much? And what, especially on commission and other disbursements, where you need to tell the person why this month he gets $5 and next month he gets $5,000, and they shouldn't get confused or call you up. Problem with paper checks. Snail mail is one of the biggest problems. Second biggest problem is lost checks, reissuing checks,
Yeah.
depositing a stopped check because you reissued a check. When it's 500, this happens on a daily basis. So I kind of realized this is unsustainable and inefficient. So I was starting to look into ACH processing, and ACH has the problem that it has zero communication with the recipient of payment. And between 500 people, there is always one person changing his bank account once a week. So always updating, making sure, oh, we send it to the old account, to the new account, etc. And there is no real way of tracking things and all that stuff. So this kind of made me realize that there is something broken in the system. I actually tried using some competitor products at the time, and I realized that they are all trying to do some part of, let's call it AP automation, AR automation,
Okay.
where they're automating a certain part of a system, but they are adding another clumsy and cumbersome system. Basically, instead of eliminating completely the problem, they added a different, smaller problem, I would say. It's
Okay.
not that they eliminate the problem, they just added a little bit of a smaller problem. So after selling the company, I started doing a lot of research, and I actually spoke with hundreds of bookkeepers just as market research, trying to figure out what's the real problem in payments and invoicing, understanding the flow of business, understanding what they're doing, how they're doing. Actually, one of my previous companies, I was the finance manager as an employee, one of my jobs in the past. So I actually did have QuickBooks Pro Advisor test passed, I
Okay.
think in 2005 or six, one of those years. So I was a little bit familiar with accounting and QuickBooks and accounting in general, but I didn't know everything to the intricate detail, especially I wasn't involved that much. So after trying to come up with a couple of different types of solutions that may or may not work, and one of the things I have is before launching a solution, we're trying to get mock-ups and show it to users and ask them, see if they want to sign up. That's my basic route to business is when I build a product, build a mock-up or a minimum working product and ask the person who you understand when you interview that he has a pain point and you were trying to solve his pain point, would you want to use it? How much would you pay for it?
Yeah.
Based on that, you can decide whether it's a product or it's not a product. And after, I would say, 19 or 20 iterations, I saw that nobody's biting on anything. Everybody is already trying to solve problems and automating things.
So what you're trying to address is obviously the payment. So you've got customers that need to be paid, or not customers, but affiliates that need to be paid. And you're in a position where each day you've got a number of these payments that need to go out. The paper check isn't working. The ACH isn't working. So in this process, what was the thing that you found was missing that needed to be addressed?
So I'm still at the place where I couldn't figure it out because it wasn't just payments. It was notifications. It was communications. It was settlement in the other party's account. There was many things. The friction is too big to say it was one thing.
Okay.
And when the friction is too big, there is nothing we can do to fix that. And I would say after, I think around 19 iterations, and I'm talking about every iteration takes at least a couple of weeks, interviewing over 400 bookkeepers, accountants, or bookkeeping companies, people who are involved in this. And I started actually after a couple of hundred, and I saw that I'm kind of hitting a dead wall. I started using Zoom for the conversations and not doing it in person. First of all, because it was faster. It was
Uh-huh.
pre-COVID times, but it was faster through Zoom. And the other thing is I was able to record it and review it later.
Okay.
And after reviewing a couple of hundred videos, I would say I went into a frenzy for a couple of days, looking over videos of the videos and trying to find a common denominator. What's the problem? I realized something almost like an epiphany, the aha moment, which is every accounting application by its design, and I will say it in a high level term and then I will go into details. Every accounting application by its design is a siloed system that nothing goes in or out except in an analog way. So let me explain.
Yeah.
From an historical perspective, every company had books. Books were papers in manually writing into the books or papers out, checks in, checks out, a full general ledger where every transaction had to be posted on both sides for double entry transactions,
Yep.
so on and so forth. We digitized the book itself to a large degree. Every company with their own ERP, accounting application, or whichever way they do their business. But nothing has been done to create a system that talks between one book and the other. There is no network or standard other than there is one standard which is used by larger corporations that the name just slipped me. There is no real standard that talks between one accounting system and the other.
Now, are you talking about journals and ledgers, or are you talking like QuickBooks and something else?
I'm talking about QuickBooks and something else, or
Okay.
QuickBooks
All
and
right.
QuickBooks. If I have two QuickBooks files on my computer, if I
Okay.
want to make an invoice from one company to the other, I have to create a PDF, and then in the other one, I have to manually enter that PDF. PDF essentially is an analog piece of paper in a digital format. It has zero contextual background into it other than the basic data points. And a paper check is the same thing, and a payment is the same thing. Even ACH or any other type of electronic payment, you have to log into your bank, manually make that payment. Even if you're more efficient and you're larger and you can export a file and import that file to your bank, it's still a process that does not allow your bank to see your accounting application, does not allow your accounting application to see your bank. We're kind of bringing in feeds to feed data in and out in an analog way.
So I'm curious, as you're describing this, I don't know that it's the same, but what it's sounding like to me is what I understand blockchain is trying to also address.
Yeah, I don't discount that. Blockchain is possibly trying to address that. I'm not saying blockchain will have the possibility to do it
Uh-huh.
because of contextualization, which is one thing we're actually trying to figure out, and that's basically our strongest point. One big example, which we have actually filed a patent for it, is if I call Duracell AAA batteries in my accounting application Duracell AAA batteries, and you in your accounting applications, you call it premium AAA batteries, and you also have AA batteries in 2As, it's very easy from a basic human perspective or even a technological perspective to mix up between the AA and AAA. AA and AAA, it's not a huge differentiator. We have to build a lot of machine learning and AI algorithms in order to understand these details. So I'm still at the planning phase.
Uh-huh.
And so this is the basically I was this is was the problem that I found. Basically, to put it in a simple form, accounting applications want to talk to each other but can't. And I always say internally in our in-house, if anybody would have imagined that me and you having a conversation only met over digital means, over the internet, and understanding each other and having a relation, we can even have a podcast together. And if anybody could have predicted that 30 years ago, it would have been the most prophetic prediction, including something like Fiverr, Uber, which are basically connecting people to one another based on certain professions and delivering services based off that. So we have the concept that systems talk to each other, system talk to human, human connecting to human. What we don't really have a proper way of machine to machine talking, especially in the context of accounting and bookkeeping, in money management. This is kind of where we're going. So, what we decided is to build a simple plugin to accounting applications that does virtually nothing other than executing whatever you entered in your accounting application on the other side of the equation. So with payments, for example, this is one of the things that we're focusing right now to autonomize the payments.
Uh-huh.
Once you enter a payment in your accounting application, we take out the money from your bank and we process it and we send it to the other party. If the other party also has downloaded our plugin, we actually can close the invoice on the other side, so the person doesn't even need to accept the payment. We deposit it, we close the invoice, everything is done.
So what I'm hearing you say is that what you're doing is for the two businesses with your plugin at both ends is you're trying to create a seamless experience where one transaction is finalized on the other end and the two are with your system um, linked.
This is what we currently have. And we're adding, basically, we currently have that for checks, ACH, and other type of electronic payments. We're adding now card payment management. Basically, when you charge a card to even push back data to your accounting application. And we're working now already on invoice automation, purchase order automation, predictive buying. These are the things where we're going, because ultimately, we believe that we're 18 months away from a complete autonomized experience of buying, invoicing, billing, monitoring, tracking, receiving, paying, settling the invoice, completely autonomous within the network. We're less than 18 months away from it.
So for this to work, the two businesses need to have the app basically integrated into the accounting softwares for both companies.
So let me correct you with that.
Okay.
We're building it in a way that it doesn't have to be. Basically, if only one side wants to stay on the network, the other side doesn't want to join, they can still get a payment in their bank account. It won't settle the invoice. They can still get an invoice notification, invoice notification. If they don't have our plugin on their invoice side, it won't settle into their accounting application automatically. They will be able to download it as a PDF. So they don't have to join. We don't force anybody to join. But in
Yeah.
order to experience the maximum automation, best user experience, that the buyer and the seller can all rely that manual data processes are technically eliminated, the best experience would be when both are on the network.
Gotcha. Now, obviously, that's the ideal experience where both entities on the two different ends are involved with the app. However, is it specifically for a particular accounting software? For example, does it work with proprietary softwares? Does it work with Xero, FreshBooks, QuickBooks, desktop, online? I mean, what can you tell us about that compatibility?
So we currently are operating QuickBooks Desktop, QuickBooks Online, Sage Intacct, Yardi Systems, Acumatica, Microsoft GP. I probably missed a couple.
Yeah, that's
We
fine.
have public APIs that we have some proprietary accounting applications who have customized their own proprietary in order to interconnect to our system.
Uh-huh.
The advantage is so big for companies who are using us, especially in the early days, since we're focusing now mainly on the payment automation. For any company who does more than 200 payments a month, we're saving them probably a couple of hours in manual labor, eliminating complete errors. And as a byproduct, we're actually way more secure than any other transaction, because every transaction gets vetted from an AI perspective, and it has a lot of involuntary built-in, like a positive pay system, two-step verification. In an inadvertent way, it's set up that way. So we
Okay.
have much more security. We have companies who have switched to us for security reasons. We have companies who have signed up with us because they're doing a lot of payments, and that's why we have actually integrated with accounting application based on demand. We're probably going to have, by the end of 22, I would say around definitely over 50 accounting applications integrated, maybe even more,
Okay.
based on our speed of integration and the streamlining of an integration process that we already have. So potentially we will integrate with, I believe, with almost every accounting application.
Very good. So it's then natural for the accounting professional to ask this next question, which is for years there's this implication, this idea that at some point the accounting process will be automated and will impede their need for employment or for their need working with clients. Um, is that something that this is going to achieve? Is this something that you see as possible? What should the accounting professional understand about their role as a person in this process?
So, first of all, I always like to say automation is coming, but it's not automatically. It's not going to get. It's everything will be automated one day, but not. It will not automatically get there. There always have to be a human being behind making things automated or autonomized, whichever way it is. We're trying to say the difference between automation and autonomy is automation means you have to automate the process. Autonomy means the machine does everything on its own. But back to your question, a bookkeeper has nowadays, I would say, the vast majority of the time that a bookkeeper spends in a company is data entry. And I believe no bookkeeper has decided to become a bookkeeper because they want to be a data entry clerk. Every bookkeeper has a passion to help other businesses, love books, organized, love to see where companies can improve, either in processes or in financial transactions or in any other stuff. Everybody has their own passion and their own way why they decided to enter bookkeeping. I highly doubt that anybody entered bookkeeping because they want to be a data entry clerk. We're not going to take away bookkeeping or accounting jobs. We are going to eliminate the cumbersome manual data entry processes, which is the source for most headaches they have to deal with, and that's most of their stress that they have, and we're going to eliminate that so they can focus on whatever they're really passionate about and not what's just driving everybody crazy.
Well, first of all, I like your explanation and feel that this is something that accounting professionals can actually get excited about. Just in the most simplistic terms, if you're looking at bookkeeping and the average for many small businesses is about 8 hours a month of work, what this is meant to do is hopefully eliminate some of the challenges, such as the data entry you mentioned, some of the errors that need to be addressed, so that the average time spent per client decreases. But in the end, they're still charging the same amount at either a flat rate or menu priced point or value price point that allows them to still charge what they've always been charging, but now do the work quicker and more efficiently. But the value of this comes that it now frees up, like you were saying, time to actually put more into the advisory type work, the analysis, and really get away from some of the things that are more frustrating and challenging because they're being automated, as you're explaining, and perhaps even becoming more secure, at least in the payment process, because it's now this very secure network that's very much automated. So I appreciate that explanation. So you said in 18 months, this is perhaps going to be a reality. So what's the difference between what exists today and what would exist in 18 months?
Basically, we're currently only focusing on the payment part of automation because we believe this is the most vital. It's the toughest challenge, and we decided we'll tackle the toughest challenge first. But from here on out, it's pretty much a lot of machine learning algorithms and artificial intelligence to make sense of data within an accounting application or within an invoice, I would rather say, in order to properly map it and properly suggest the right mapping to the recipient of the accounting application, and adding contextualization, I would say, to every line item. From a tech, so it's a bit too technical, and I don't think it's the right way of explaining it. But the point is, building out the network is one of the biggest things that we're focusing right now.
Uh-huh.
And the second thing is adding features and functionality that will add automation that will lead to autonomizing more and more the process of books management and books and financial management.
Perfect. Now, with that explanation, I think you've done a good job of explaining what it is we're talking about. But here's the question that I'd like to now ask. If the accountant sees the value in this and sees how it could help minimize their job doing, let's say, the data entry, as you mentioned, what's the selling point for the business owner? Is this something that the business owner is going to want to embrace, or is it something that the accountant's going to need to educate and be more, maybe insist is too strong of a word, but compelling to actually get them to want to use on their end?
we've seen a variety of companies how they manage their own customers. Some companies will do paper checks or ACH on their own cost. So if the accounting firm is not charging the companies for ACH or paper checks, which is costing in the bank, we're probably a wash, and we're maybe even the same cost or even less to some degree.
Okay.
So in terms of convincing the customer about pricing, we've also seen a huge demand for our product on customers who don't do complete AP. Basically, a lot of accounting companies are not doing AP for many reasons because they don't know how to manage the financial flow. They don't want to be involved in the bank, and they only want to do it after the fact, and et cetera, et cetera. With our system, they can take on AP and do the preparation of transactions, yet it's almost like you can print out checks in a digital way, which is not checks. So technically, we have a product that's called VChecks for
Okay.
virtual checks. The way it works is once you make a check in QuickBooks, we pick it up and we assign a check number. Our system assigns a check number, and then the payment is being taken out. The money is taken out from your account and it goes into the recipient's account. The recipient gets a notification, and they have a simple way of entering their account number and routing number, and the money goes into their account. Which, by the way, we have a lot of security there. When we send somebody a payment, they put an account number and routing number. We check with the bank if it matches the pay to the order of name, and there isn't a cumbersome onboarding process. All they need is their account number and routing number, but we do a comprehensive background check on that to make sure that doesn't go into fraudulent account, etc. We've actually processed over $150 million with zero cases of fraud so far.
Wow.
So
Well, this is very exciting because obviously for the accounting professional, anything that we can use internally to not only systemize, but at the same time simplify some of the tasks that we're having to perform in order to create the financial reports that we generate for our clients, that's a win for us because internally we're able to hopefully systemize some processes, automate some processes that free up our time, still allowing us to charge what we do for our fee, our services, and keep that fee, but now do it in less time. For the client, this is having a lot more benefit because it's, I think, streamlining, but also providing, as you described, some security in the transactions, eliminating ideas of fraud. It's eliminating perhaps a lot of this, especially with so many transactions, the need for duplicate efforts, repayments, canceling payments, and so forth. So I'm hearing a lot of advantages with that.
two more things I want to add
Okay.
is in our transaction, actually in your bank statement, you see the check number that you have in QuickBooks as a regular check. So it makes it very easy for error reconciliation. We also include a link in every bank statement that links back to our portal to all the details of the transaction for both parties, so they can always get back and see, like a pay stub, what the transaction was for and what it was involved in the transaction, etc. And this is one thing. The other thing we have is full control, which means the owner of the account, the bookkeeper can create payments, but the owner can do a setting on the account. Even the bookkeeper created payments, the owner needs to review and approve every transaction. So this way you have a way of them creating all the paper checks like in a digital format, and you sign it whenever you're ready to sign it, and the person gets it. We even have post-dated transactions. If you create a transaction post-dated in QuickBooks, the recipient will get the notification of payment. The actual funds will only process on the day of the transaction date. So we have technically all the advantages of a paper check
Uh-huh.
without any of the limitations, with the notification, with the network, with everything, and even more. A transaction clears next day. It's not like it's an ACH, but not like regular ACH, which sometimes takes 3 to 5 days.
Correct.
All transactions clear next day. So that's another point that I wanted to add.
So does it matter what banking institutions are being used for this?
So far, any U.S. bank works. We're operating only in the U.S., but we're actually considering international, but we're not there yet.
So this doesn't involve wire transfers and so forth.
Currently, at the moment, not. It's something
Gotcha.
that we'll consider in the next quarter.
Very good. All right. Well, Moshe, this has been a great conversation. I've really not only learned a lot, but I feel that what you're developing and implementing can be of benefit to the accounting profession simply because as technology helps us do our jobs more easily and better, it's only a win for us and it allows us to get back to what really we should be doing as an accounting profession is now meeting with and advising our clients to understand and use this information from the financial reports to make better informed business decisions on their end. So, what I'd like to do is I'm going to just real quickly kind of summarize what I felt that we discussed and then come back to you for a closing statement. As I wrap this up, one of the things that I want to encourage our listeners to do is to go to the episode description. It's there that you'll actually find some information on Shatar and basically get some insights on what it is that you can take advantage of looking at this type of platform and so forth. But also at the same time, you'll see information in the episode description that's related to Universal, such as some free resources that we provide to help you as you're working on your business, as well as information regarding GrowCon, a live event for accounting professionals to attend and participate as they work on their business to in fact become the premier accounting business in their area and be the entrepreneurs they need to be. Now, for that information, definitely go to the episode description as well as subscribe to this podcast to get access to the other episodes and notifications you need as to the different shows that are coming out with experts each and every week. Now, that being said, as a summary, one of the things that excited me about this conversation today is with technology, there's always something on the horizon that is offering the opportunity, the potential to simplify the work that we're doing so that we can get away from maybe like Moshe indicated, the data entry side of the business. And if we can do that, that just frees us up to do more of the analytical work, which oftentimes many of us as accounting professionals enjoy and prefer to do. Now, the other part of it is the not just the systemization of this, but it's then improving the accuracy of the data. And that's one of the things that we're always looking for is the opportunity to get away from the reconciliation and so forth. So good things there. Obviously, very insightful. He's been very successful with his 3 businesses that he's sold already. I'm excited to see what he's going to be able to accomplish with this company here in the coming years. And as he indicated, here in perhaps a year and a half, you'll be able to actually implement some additional features to this service. So definitely something to pay attention to, watch, and see how it can be beneficial to not only us as accounting professionals, but also our clients. So with that said, Moshe, do you have a final thought?
My final thought would be automation is not our enemy. Automation is our friend. Automation is taking away the pain points that we suffer every day from, the things that hurts us most. I understand that a lot of current AR and AP automation can sometimes give the impression that AR automation adds other pain points. Maybe it eliminates big pain points, but it adds other small pain points, and it still irks us how it works. But ultimately, automation shouldn't be that way. Automation should lead to complete autonomization, as we call it, that takes away the pain point and autonomizes the manual, cumbersome processes of the business.
Well said. Well said. And thank you. So here's what I'm going to do. I'm going to wrap this up by obviously encouraging you to listen to our other episodes and subscribe. You definitely want to remember that if it's about accounting, it is universal. But for more information on this and how you can apply these principles and other things in your business, I would invite you to actually go to universalaccounting.com or give us a phone call. You can reach us at 801-265-3777. And always remember this, accounting success is universal. So be safe, enjoy yourselves, and have a great day.